Hello, everyone. We are here with Soul Financial, also known as Rochelle. And you've probably seen Soul Financial on various platforms, educating so many of you and just creating so much valuable content and insights and information and education. She's also one of the mentors on the FinMeUp app. So you've probably seen some of her amazing content on the FinMeUp app. It's awesome to have you here. Thank you so much for joining, Soul.
Thank you for having me. Thank you for having me, Higgo.
Yeah, so let's talk a bit about investing. So with investing, we all make mistakes and we learn from it, and that's what makes us a better investor. We just need to win more than we lose, and we need to learn more as we go along. So what are some of the big mistakes that you've made that others can avoid, and what have you learned from?
Okay, so, I always say my biggest mistake was probably not starting investing, immediately when I started working. I've always been a person that, I like saving. It's been something that my parents taught us was to save, but I didn't know about investing. I didn't know, where to start, how to do it. And saving does not beat inflation. It is, as it's a healthy habit to have, is, to save money, but start investing as soon as possible, because compound interest is really an amazing thing. That was my first mistake. The second one, I would probably say not reaching out to people who know better. I think, I started investing about 14 years ago, so when my daughter was born, and I did it alone. It was not this thing of social media, etc. And people have so much access to brilliant minds, on social media. People share. People like Anthony Clark, who was really good at doing this. The FinMeUp team, the mentors on the app, Simon Brown, etc. Just taking the lessons, we will be surprised how much people share for free. So you don't always have to pay for content. It's just following the right people and learning from them. Take the lessons. You don't have to make the same mistakes that other people are making. And then the last one that probably haunts me a lot is diversify. You might love a certain industry very much. For me, that was mining. I started my career at Sasol. I've always loved the mining industry, but I was too heavily concentrated in mining. So learn as much as you can and allocate according to risk. No matter how much you love a sector, if something happens to the mining sector, it's probably going to happen to all the companies in there, like we're seeing right now with, with the tech meltdown, the whole recession that is brewing right now. So diversify your portfolios, even if a stock looks boring. If it's a solid company, it's increasing its profits and its revenues, allocate a bit of money to it. Don't be stubborn. I think that's one of my downfalls, is I used to be a very stubborn person. So learn from other people and diversify those portfolios.
I must say, I started investing when I was 13, but also we started it sooner. But starting at 13, you can imagine I also learned quite a few lessons from doing things wrong. But that's how you learn, and you learn from others. And I was, also just trying to be obsessed with learning. I remember following some of the names you mentioned when I was 13 back in the day. And, it's incredible how much free education there is. And that's exactly what we are trying to do, on the FinMeUp app as well. There's lots of free content. So there's so many lessons. It's just, you are going to learn your own lessons as you go along. And it's just important to learn. So let's say I'm a beginner investor. I just bought my first 100 Rand worth of shares in ShopRite because I know it, in Woolworths because I know it, and in MTN because I know it. But I have no idea what I'm doing. Is there any tips you would give to a beginner investor that will help them along the way and just figuring it out and not giving up? Because I think that's the biggest mistake we can do.
I actually want to emphasize that, don't give up. I think The worst thing people can do right now is give up on investing. Markets go through cycles. You are going to see these downturns. And we have to be realistic too, Higgo, is a lot of people had a lot of more disposable income and a lot of free time, during the hard lockdowns. And people chased share prices up. There was a lot more money in the economy. The US was printing dollars. People were not traveling. So a lot of people started investing in 2020 and 2021. And the downside to that is they bought really expensive shares. So you bought a business. That's what I tell my mentees is you don't buy a stock. A stock is something you see on a chart. You're buying a live, breathing, living business with people in it, management in it, customers in it. Give the business a chance. When somebody tells me, hey, I bought ShopRite last year and now it's down or nothing has happened. I'm like, ShopRite is 50, 60 years old. Do you really expect the company to do something in 1 year? Nothing is born in 1 year. So I want people to know, don't give up. I also want people to know that you do not need a lot of money. What you need to concentrate on right now is building habits. It's building healthy habits of, I earn 1,000 Rand, I'm going to take 100 Rand and invest it. Next month, I take 100 Rand. Focus right now. Don't focus on the balance in your account. Don't focus on, I'm 10% down, I'm 50% down. Focus on, I'm trying to buy as many shares as possible, because that is what is going to set you apart from the rest when these markets inevitably turn again, because nothing goes up forever, but also nothing goes down forever. These markets have 100% track record of recovering. This is no different. And I know it's hard because we are right in the middle of it right now and you're feeling the heat. You maybe bought Bitcoin at 60,000. It's now 20,000. Guys, if you loved Bitcoin at 60,000, you should be hopelessly in love with it at 20,000. If it goes to 10, so be it. Guys, just be consistent. That's all. Consistency beats timing the market all the time. So start small, build habits, don't give up.
Yeah, and constant learning. It's basically when share prices fall of the companies you love, it's also about understanding the companies you invest in. And obviously when you are a customer, it helps because you understand the business. But if you understand the business and you see these massive share price declines, you're going to stay in control of your emotions, because that's the most difficult thing, in my opinion, with investing. The stock market is correlated to emotions. And as share prices fall, people start to sell more because they panic that it's going to go to zero. But you should actually think of it, in my opinion, as an early Black Friday. If you love something, like I said, when it's high, you're definitely going to love it when it's low. So it's got to stick to that plan and emotion. So speaking about, sticking to the plan and investing in what you are highly convinced in, what are some of your personal stock picks? So this is not financial advice. This is just in your portfolio. What are some of the companies you currently like or are investing in or watching closely? And obviously, I've also read your stock picks on the FinMeUp app. Incredible, love all of them. So there's a few companies there, but just to name a few.
Okay, so let's talk about, because I like talking about things that are topical. Okay. And we are in the S&P 500 is down over 25%. It's the biggest index on earth, okay? The top 500 stocks listed in the United States. So we are in a downtrend right now. What I do in a downtrend is I invest in the solid companies in my portfolio, the companies that, one, has a track record of excellent revenue, like revenue growth, companies that have solid earnings growth, which means their profits are increasing consistently every year. And then companies that have amazing management, okay? Companies where I believe management is not going to let this company sink come hell or high waters. So I have really been focusing during this, we call it a bear market. I've really been focusing on adding to my winners. Okay, I identify as a growth stock investor. You will see my stock picks. I love SoFi, I love Stem, I love Matterport, I love these companies, I love Palantir. But I've been focusing right now on buying as much quality as I can. So the companies that I in my US portfolio, I'm going to separate my US and my JSE portfolio. I've been adding to Nvidia. Okay, I've been owning the stock for a very long time, and I really think, there is no ifs or buts or maybes about semiconductors. It is a fact. You cannot bet against it. It is needed for the future. So very strong company, I've been adding to it. I also, as I said now, SoFi, I loved SoFi at $12. There is no ways I am not going to love it at $7 or $8. So I'm trying to buy as many shares as possible, ignoring the noise. Okay, the banking charter has been approved. They keep on rolling out products. They really, really speaking to Gen Z, okay, in terms of their client base. And that's a whole new client base. Gen Z wants a different type of banking than the traditional banks. And SoFi is giving it to them. I mean, we have the SoFi Stadium, that is one of the largest stadiums in the United States. Their name is going to become a household brand. And you're going to ask yourself, in a good 10 years, how did I miss that? How did I miss that? The last company, it's also a very risky company, but I just can't stop loving it. It's Upstart. I cannot stop loving this company because every single week, Upstart signs a new partner. So Upstart does artificial intelligence lending, okay? It is where we don't use the traditional way of issuing loans. A lot of the population and races, etc., are excluded from affordable lending because of how historical lending was done. The processes, it's just tedious. So I understand the business. So loving Upstart at 300, how can you not love it at $40? I know the company's not profitable yet, but I am tracking all the new partners that are signing on and then just holding. 90% of investing is holding, people. If you are having a very exciting time investing, you are doing something wrong. It should be boring. So that's on the US side. That I really love those companies.
Just on that, before we get to the JSE stock picks, Nvidia was actually the first US company I bought when it was, if you do the split adjustments, I think it was $9. So I've also loved it. And, throughout that was in 2013 or 2014, somewhere there, there's also been various corrections where, the share price, I remember the first time it fell from pre-split from like $220 to $150. I'm like, I need to sell, but I didn't sell, fortunately. And the semiconductors, like I said, it's something for the future. There's always going to be a demand. It is cyclical to an extent with demand, but it's always going to be there. And, personally, I also love it. And I own Nvidia as well as AMD. So far, I also love, their own CEO is just getting his skin more and more in the game. He recently bought shares almost every single day. I also love what they're doing. They actually, enhanced their outlook, to something more positive than we imagined. So I also love SoFi. It is still also very early days, still not profitable. And the last one, Upstart, I don't own yet. It looks very interesting. Just on that, how do you think the interest rates and inflation, so obviously with inflation, the Fed hikes interest rates, how do you think that will impact a company like Upstart?
Okay, so interest rates generally have a opposite effect on financial services institutions. Okay, so if we take a company, let's say NVIDIA is one of our companies, and NVIDIA has debt. They're not selling interest to clients. They basically only have debt on their balance sheet, and they need to pass on the higher interest to clients. If you think about a company like Upstart that is in the lending business, okay, it's software for lending. When you lend, so you are going to borrow at a higher interest rate, but you're also going to lend it on at a higher interest rate. What I love about Upstart is that the average person who would go to the Bank of America or would go to Wells Fargo to get a loan is probably going to get a 10, 11%, 12% interest rates. Because we are using artificial intelligence, and you can tell with 99.99% accuracy if this person is able to pay you back, because you have collected 6 million data points on this person's behavior. It's artificial intelligence. You can give them a lower interest rate. So who is going to do better in an inflationary environment between a traditional bank and an AI bank? So you have to think about it that way, as higher interest rates affect different businesses in different ways.
Very interesting. I'm definitely going to have a deeper look into Upstart. It sounds really interesting. Okay, so getting into your JSE stock picks, let's go local. What are some of the JSE South African companies you like?
So let me start by my absolute favorite. Everybody knows I love Sasol. I've always been a Sasol investor. I understand the business. I know how correlated Sasol is obviously to the oil price. And it's no secret that, Sasol is doing really, really well this year. All the oil companies. I saw, the top performers in the United States in terms of the S&P 500 stocks. Most of the top 10 that is up the highest, it's oil companies. So Sasol is just one of those solids in a portfolio. I was a bit upset that they canned dividends, but I understand it will come back again. The second company that I love is the Purple Group. The Purple Group is by no means a perfect company, but what growth company is. They have democratized investing. They have solid plans. I mean, Charles and the team have solid plans to expand, the client base. We can't ignore at what rate the new customers are onboarding. It's phenomenal. Charles issued the 10 Rand plan at the last AGM, the last investor presentation. I think there's still a lot of runway for GT 24/7. There's still a lot of runway for Rise. Easy Equities is the one that we all know, but there are some other gems under the Purple Group umbrella. And who knows what they're going to do next? I mean, I work with track records, and Easy Equity started off slow and it exploded. Okay, I think there's still a lot of runway. There's a lot. If I look at my followers, there are so many people who haven't started yet, who've opened an account and they just don't know what to do. So we need to still get to those people. Then the last company, and it's my favorite by far, is Renogen right now, it's just, you can't underestimate. I know there's still a lot of risk attached to it. I always tell people, it's helium, LNG. You have to understand what is in the ground. We are not geologists, but Steph and the team makes it very simple. They tell, if you read the investor presentations, you can see the concentrations. I mean, you can't deny that a 12%, like helium at those levels, it's nowhere else on the planet. So the risk right now is in getting it out of the ground and getting it into those tanks and shipping it off to clients. So I'm very excited for phase 1 to see how much we get out of there. I mean, all of the gas has been sold already for phase 1. Then phase 2, who can deny all the funding has been secured? And I think there's been such a significant de-risking that the only risk that that for me, that's a big risk kind of right now, is just how safely and effectively do we get it out of the ground. But if you read the monthly operational updates that Renogen puts out, I mean, it's safety first. It is getting it out, with the least amount of complications. And I love how transparent the company is. It's just, being a retail investor, we don't often have access to CEOs and CFOs. And, I mean, we met, when we went to visit Renogen, we met the engineer who built the plant, who designed the plant. You don't get that type of access, and it's very exciting. So Renogen, for me, as long as that share is under 50 Rand or 60 Rand, I'm going to keep stacking, and I'm going to wait and see, how it plays out. But obviously, understanding the business. So even if Renogen goes from 40 Rand to 20 Rand, as you said earlier, if you understand the company, it's a Black Friday sale.
Exactly. And, that comes with personal conviction, and personal conviction comes from doing your own research, which also leads to understanding the company and understanding what you are investing in. So that absolutely makes sense. I must say, Renogen is also currently the biggest holding in my JSE portfolio. Just because, along family lines, I have people, or some of our family members, work in different areas in the world to do with hydrogen and so on. And, they also seem, optimistic about Renogen. There is definitely risk still involved. Like you said, it's still early. It's the first risk is the capital that they need. But so far, it looks like that has been going well. Just the due diligence that needs to happen. So hopefully that goes well. And then secondly, like I said, the safety. So it is still early, but I mean, risk equals reward. The higher you risk, the more you can lose, or the more you can make. So it is definitely one to do your own research on, as all companies. Purple Group, Easy Equities is doing an amazing job, really adding value to so many people's life, allowing them access to investing in various markets. So it's awesome to see. And what was the first company again?
Sasol.
Okay. Yeah. So you are, when the oil prices go up, you're probably smiling a little bit, even though the petrol stations are quite expensive these days. Thank you so much, Rochelle, also known as Soul Financial once again. You can find her content, her education. There's so many free content. There's stock picks there. There's so many content that she provides on the FinMeUp app. The app is free to download. It's free education. You can just spend a few minutes a day, each day, and become closer to financial freedom. It all starts with understanding. Thank you so much, Sol.
Thank you so much, Higgo. Bye.